why would I invest in Bitcoin and not an ETF?
Sure. The big boys out there, Jack Maurer, Michael Saylor, Tom Lee, these people who are big Bitcoin advocates and have been for a long time, they are making the digital gold pitch. Tom Lee in 2017, when Wall Street looked at Bitcoin like it was the black sheep, they were saying, like, I think Bitcoin was maybe up to $1,000 at the time. So it had some growth, right? Like people had become millionaires, but it was still very, very volatile. And people had, certainly Wall Street and institutions had their negative thoughts about it. Tom Lee wrote a white paper about basically the power of cryptocurrency, the power of the blockchain, and how Bitcoin could capture a chunk of the gold market cap. So the gold market cap above ground gold, I think, is like $21 trillion. It's a huge market cap. So back in 2017, he said, hey, I think in 5 years from now, by 22, Bitcoin, which is $2,000 a coin right now, could be at least worth $20,000. And then at the most, $55,000.
Yeah.
And people were laughing in his face, going, you're crazy. This is never going to happen. And obviously, we've now lived through that. And in 2021, it hit about $69,000 per coin. So Tom was right. And it was mainly doing that because it was capturing the gold buy. It's not necessarily replacing the NASDAQ or the S&P 500 or traditional retirement-based, but it is a flight to safety, if you will, probably a little bit too correlated to the market right now, but it is growing exponentially, and it is much easier to carry on gold. Like if your currency is falling apart, which is what a lot of the people are saying, like America's, I think the US dollar is down 13% since Trump came in office. If your money was in Bitcoin, which some people might be like, are you crazy? Some people are living 100% in Bitcoin.
Which is ridiculous.
You say that, but the US dollar is down 13% this year.
Yeah, but the thing is,
we get excited about 10% returns.
No, but go with me. So you're saying people are like buying groceries and all that with Bitcoin, right?
Yeah. Or if you need to buy your groceries, you sell a teeny portion.
Which is also ridiculous because the daily fluctuations in Bitcoin is a lot more than the daily fluctuations in the USD or the AUD.
To both ways. Just like any chart, when you're looking at a daily chart,
yeah,
I mean, look at the movement of a US dollar on a day-to-day basis. You're like, wow, things are really flying compared to other currencies.
Yeah, but I think the difference is for most people, like if I'm using Australian dollars to buy my cappuccinos, I live in Australian dollar every day. So the price for me in relative terms, my cappuccino is $5.50 every day.
Sure.
But if I'm paying with BTC, I might get, it's got to trade back to my AUD. Right. So one day that coffee could cost me $7. The next day it could cost me $3.
Sure. But the people who are doing that, like Jack Maurer, I think is how you pronounce his last name. He's like the creator of Strike, which is like the Lightning Network that you can actually make payments on. He's creating a new Bitcoin treasury company. He has been Bitcoin only for a couple of years now. And as the US dollar has been dropping, Bitcoin has been going up. So yes, on a day-to-day, now if you want to buy a house, it might look a little different. But your Bitcoin isn't going to crush you.
So this guy who's living in Bitcoin, the banking system that he uses, it must convert down to USD at the point of sale.
Or whatever currency you're in.
Yeah, so there's still a conversion that needs to happen.
Sure.
So why bother?
Because you're converting it. Bitcoin could be up 10% while the dollar has dropped 5. You're up 15.
And what about transaction costs on a $5 coffee?
It's very small. Like we could do the research on it.
Look, and this is why I wanted to get Nick on to talk about this, because I'm not there.
Sure. And I'm trying to get you there. That's what
trying to get me there. So,
but listen, let's just talk real quick. We've discussed the housing thing, and I'm going to botch the numbers. I'm going to round them up. I could look them up on my phone real quick, but I don't know where my phone is.
It's just behind you.
All right, so let's take a quick break while I look this up. So this is, again, it's not day-to-day like you're talking about. Your paradigm is still shifting. Let's talk about years now, because we're old enough that we can now talk in years. When you hit the 4-decade mark, you can look at years. In 2016, the average house price in America was $288,000. That would have cost you 664 Bitcoin.
Mm-hmm.
So 288 for the USD, 664 Bitcoin. 4 years later, housing prices went up. The house is now 328, so it's up $40,000. The Bitcoin price is now only 45. So 4 years ago, that house cost you 664 Bitcoin. 4 years later, 45 Bitcoin. 2024, the average house price in America is 434. So it's up $200,000, but it cost you 6 Bitcoin. So day to day, there is some fluctuation in Bitcoin. But when you look at 2016 to 2024, the house hasn't changed.
No.
The house has gone up in value, and what Bitcoin people are saying is the currency has devalued, making the real estate look more expensive. It doesn't matter to the average person because they're getting paid in U.S. fiat currency. It cost them $288 to buy the house in 16, cost them $434 to buy it in 2024, but it went from 664 Bitcoin to 2024, 6 Bitcoin. So had you gone crazy in 2016 and converted your life to Bitcoin, you could now buy a house for 6 Bitcoin.
But you also wouldn't, because most people wouldn't stomach the fluctuations that we've seen.
That is definitely something. It takes a paradigm shift and maybe a strong stomach, because you do hear it like...
But since 2016, there's pretty much, in terms of just Bitcoin, it's gone to the moon, right?
But even then, actually the biggest moves of Bitcoin happened from like 11 to 16 or 17.
That's right. But
in terms of percentages,
you're
talking
are we
pennies.
Going to see those year-on-year major leaps?
Probably not. Michael Saylor, who is the chairman and head of MicroStrategy, now it's known as Strategy, their Bitcoin treasury company, what his projections and his quantitative math guys are saying, they plan on, if you're looking at the smoothed out, 29% per year, basically for perpetuity.
Really?
So he's saying, gone are the days of 1,000% moves, woe is us, but we think that it's going to average out 29% year-on-year growth.
And I think that's the whole thing. Like, as more institutional money goes into the asset class, because if you have a look at traditional research houses that would research a managed fund or a new financial product, and then they would look at it, and so that's it's probably part two to this thing is in institutional approved products, quote unquote, there might need to be a certain amount of funds in there, so that
a certain market
cap or something like that to make it. It's much like a share, right? It's like
the problem with Warren Buffett right now. It's like they're having a hard time to buy things because he's got $325 billion in cash. He could buy literally, I think, 325 of the S&P 500 companies. He could empty Berkshire's wallet, buy all those companies.
100% outright.
Yeah.
Yeah. Wow.
300 of the 500.
So he's tapped out of the monopoly game. He's done.
Who knows? They just sold all their BYD. We'll see what happens. But the problem is when you get so big, you need a market cap big enough.
Yes, but I think what I'm saying, we're now with particularly Bitcoin, the market cap is there and more money will go into it now because institutions are like, well, it's obviously got a certain size. It's been around. Not everyone's like, if 10% draw out, it's not going to crash the currency.
I don't know the exact company. Maybe you can put it in the show notes. But just 2 days ago, an American company was acquired at a 25% premium, and they're going to scrap the company. They just wanted to buy the 5,200 Bitcoin
within
the company had.
How funny.
So they paid a premium for the company to acquire the Bitcoin because it's hard to go out and buy 5,000 or 6,000 Bitcoin at a time. The market gets thrown off.
Yeah, interesting. The second question, investing in shares or any other investment models, is it like investing in shares? Well, it's not, is it? Because traditionally, if you would purchase gold, it's a safe haven to store your wealth so it's not eroded by inflation.
Still a bit of a pain in the butt. So it kind of depends on what you're looking at. I mean, and maybe, you'll be able to talk differently to the Australian market. US-wise, I can go on Fidelity or Thinkorswim or Schwab or whoever, and you can buy a Bitcoin ETF.
Yeah,
if you just care about the appreciation. Like I own an ETF by Grayscale called BTC. It's the ticker symbol, and it track. Every time you buy Bitcoin, every time you buy that ETF, they have to buy Bitcoin to back it.
Yes, and that's much like the gold ETF GOLD in Australia.
Do you guys have Bitcoin ETFs yet?
Yep. So we've got one by Global X, EBTC is the ticker, and that kind of speaks to a way to get access to it. Sure, you'll pay 0.45, which it's probably okay. I'm not mad at that, but you know that it's their responsibility to store it and hold it.
One of the quirky things on like when you really get into Bitcoin or any of the cryptocurrencies is like your seed phrase, your wallet address. Like there is some things that you got to be pretty rock solid because there's not customer support that you're calling like, I lost my seed phrase. Like I have a few $1,000s of AVAX out there somewhere that I have lost my seed phrase. And when AVAX goes to, whatever it's going to go to in the future, I'm going to be like, ugh. That $2,000 from 2021 is now worth $100,000. But
so I think I would probably say to her question, is it like investing in shares? Well, it's not, because when you invest in shares, you're buying a company, and that company produces an income, it invests, it grows. It's literally not like investing in shares. I don't think the word investing and BTC should go together.
Do you think that investing and gold should go together?
Ish. Well, okay, let me unpluck it. I use Life Sherpa Invest as one of my equity portfolios in my self-managed super fund. I think there's a 5% allocation to gold. So, but this is the thing with portfolio construction. You wouldn't call buying fixed interest investing, but it forms part of your portfolio as I guess it depends on your hedge. Or is this just semantics?
If I'm getting I invest in things to make a profit.
So, but the question is, you talk about in your book, The Quick Start Guide to Investing, building a simple 3-fund portfolio.
Yeah.
That would have bonds in there. You're not really investing in bonds to make a profit. You're investing in the bonds to smooth out the overall portfolio. Yes or yes?
Yes.
So I think...
But you will be getting a dividend from those bonds. Like you're going to get some
a distribution,
payback.
Please, out of an ETF.
Okay. Semantics again.
Yeah. And maybe I get stuck in the weeds.
And we speak in different languages.
Yeah, we do. We do.
But the point is you're trying to outpace inflation.
Yes.
The baseline of any investment is,
that's right.
Can I outpace inflation? I don't care if it's pork rinds futures contract, Bitcoin, or
tulips.
Tulips. The point is anything can go crazy.
Yeah.
But anything can make you money if purchased properly.
Okay. Hey, it's Glenn here. Thank you so much for watching today's video. You made it to the end. Can I ask a favor? Can you hit that like button and maybe hit subscribe if you want to get notified when we release further videos just like this one, whether you watch the Money podcast or Retire Right. And remember, if you want to learn more about investing, I've got an investing book, The Quick Start Guide to Investing, and there's a link in the description to get your hands on a copy. Thank you so much. Bye.